If you have a mortgage in Australia, there's a good chance your bank offered you either an offset account or a redraw facility, maybe even both. And if you're like most Australians, you nodded along, signed the paperwork, and moved on, without fully understanding what either of them actually does. That's not your fault. Banks aren't exactly motivated to explain these things clearly. But here's the problem: the structure you choose and how you use it can significantly impact how much interest you pay over the life of your loan. In the next 8 minutes, we're going to fix that. We'll explain exactly what each one does, compare them side by side, and tell you which one is right for your situation. Let's get into it. First, let's talk about the redraw facility. This is the simpler of the two. When you take out a home loan, your bank sets a minimum monthly repayment, but most lenders allow you to pay more than that minimum, called making extra repayments. A redraw facility is simply the ability to pull that extra money back out if you need it later. So let's say your minimum repayment is $2,000 a month. You pay $2,500. Over a year, you've put in an extra $6,000 above what's required. With a redraw facility, that $6,000 is sitting inside your loan account. And if you ever need it for a car repair, a medical bill, a holiday, you may be able to redraw it depending on your lender's terms. Here's the key thing to understand. While that extra money is sitting in your loan, it is reducing your loan balance. And because your interest is calculated on your outstanding balance, you're paying less interest every single day that money is in there. Now let's talk about the offset account. And this is where it gets interesting. An offset account is a separate bank account, usually a transaction or savings account, that is linked to your home loan. Any money sitting in that offset account reduces the balance your interest is calculated on. Not the actual loan balance, just the balance used for interest calculation. Here's a simple example. Say you have a $500,000 home loan and you have $20,000 sitting in your linked offset account. Your bank calculates your interest as if your loan is only $480,000. That $20,000 is offsetting your loan balance. The more money in your offset account, the less interest you pay every single day. And unlike a redraw facility, the money in your offset account is sitting in a regular bank account. You can spend it like normal money anytime with a debit card. Okay, so let's put them side by side. Both an offset account and a redraw facility reduce the interest you pay on your home loan. On that front, they can be very similar depending on fees, interest rates, and how you use them. The differences come down to three things: accessibility, tax implications, and psychology. Accessibility. With a redraw facility, getting your money back isn't always instant. The access depends on your lender. Some allow instant redraw, while others may have limits, delays, or fees. In rare cases, some lenders in Australia have temporarily restricted redraw access during financial stress periods. With an offset account, your money is in a bank account. You access it instantly, anytime, like any other account. No applications, no fees, no waiting. Tax implications. This matters if you ever turn your home into an investment property. The Australian Taxation Office states that the tax deductibility of interest depends on how borrowed funds are used. With a redraw, using withdrawn funds for personal expenses can complicate the deductibility of your loan interest. With an offset, the money is always separate, so your loan remains clean for tax purposes. Psychology. Some people find a redraw facility useful precisely because the money feels locked away. It reduces the temptation to spend it. An offset account, because it looks and feels like a normal bank account, can be easier to dip into unnecessarily. Now the big question: which one actually saves you more money? Mathematically, they can be very similar if the same amount of money is used and fees and rates are comparable. Many borrowers find offset accounts easier to use because they allow income and expenses to flow through automatically. With a redraw facility, you have to actively make extra repayments above your minimum. Most people don't do this consistently, so in theory, they're equal. In practice, offset accounts tend to win because they're easier to use correctly. Think of it this way: your salary hits your offset account. Your expenses leave your offset account. Whatever's left at the end of the month is automatically reducing your interest. You don't have to think about it. That's a powerful system. On flexibility, the offset account generally comes out ahead. Your money is always accessible. No forms, no waiting. It behaves exactly like a regular bank account. However, some offset accounts may come with fees or higher interest rates depending on the lender. This matters more than people realize. Life is unpredictable. Job loss, medical bills, family emergencies, having instant access to your money without having to ask your bank's permission is genuinely valuable. Redraw facilities are fine when things are going well, but access conditions can vary by lender. Some allow instant redraw, while others may have limits, delays, or restrictions. One more thing worth mentioning: some lenders offer both. You might have a redraw facility on your loan and a linked offset account. In that case, keep your savings in the offset and let the redraw sit there as a backup buffer. So what's our recommendation? If you're buying a home or refinancing, ask whether an offset account is available and what fees or conditions apply. Not just a redraw facility. Many lenders offer both, but some will default to redraw unless you ask. If you already have a redraw facility and can't change it, use it intentionally. Set up automatic extra repayments so the money goes in consistently, and treat it like it doesn't exist unless there's a genuine emergency. And if you're not sure what your current loan has, call your lender today and ask. A quick check can help you make better decisions going forward. That's the difference between an offset account and a redraw facility. Explained simply, without the bank jargon. If this video helped you, subscribe to ClearCents AU. We post new Australian finance videos every week, breaking down the things your bank hopes you never figure out. And if you have a question, drop it in the comments. We read every single one. Because the structure you choose doesn't just affect your interest, it can also affect your tax. That's exactly what we're breaking down next.